In the meantime, Tesla stock has roared back and is now up for the year. Has it earned its spot back in the Mag 7? Our dear Deros is looking into that for today's Tech Check Morning D. Hey Carl, it's suddenly more important for the company to report good earnings later this month. Shares are now up 80% from their 52-week low and up 12% for the year. Not much has changed on the fundamentals though. Q2 deliveries were better than expected last week, but Tesla still has more competition than ever, which is still. There are 7 mega caps in this group, but Tesla is the only one whose revenue growth is expected to slow down this quarter. Its earnings growth is expected to drop even more, by 34%. Experts say that Tesla's stock price could reach $400 much sooner than most expect. Today, we'll talk about Tesla's latest developments, including their groundbreaking progress in electric vehicle technology, autonomous driving innovations, and their strategic market moves that are reshaping the industry. We'll look at the main things that are driving up Tesla's stock price, from strong sales to breakthroughs in software and energy solutions. We'll also talk about how outside factors like economic trends and industry regulations might affect Tesla's path. If you think this video is helpful, please like it and subscribe to Tesla Stock News for more in-depth views. Also, don't forget to hit the reminder bell to make sure you never miss an. Business has almost tripled. This is a big difference between performance and stock price that will eventually close. The best thing that can happen to a business is for those who have to leave now to know that there's a treat in store for those who stay. I'm going to give you a list of what some experts thought would happen, Tesla's rise despite widespread doubt, and my successful stock picks from 2023 that gave me an average return of 160% per stock. A lot of insightful analysis is still to come. Just 3 weeks ago, it was said that Tesla's price wouldn't stay below $100 for long. People who watched that video probably saw a 30% gain in a month. Now that the stock is at $250, the big question is whether it will hit $400. Here's my reasoning as someone who focuses on fundamentals. Not just trading experts see a lot of potential in Tesla's moves into the autonomous technology, energy solutions, and humanoid robotics sectors, which are set to change the rules in those fields. In the last 3 years, Tesla's net income has gone through the roof, rising by 1,000% on top of a 160% rise in revenue. However, the stock is still down from its all-time high. Even though it has gone up 26% in the last 5 days, it is still down 7% for the year. This difference shows a stock that isn't worth as much as its financial performance and market potential suggests. Smart investors are currently doing very well with Tesla stock. In the last 3 years, the company's revenue has nearly tripled, going from $35 billion to an impressive $95 billion. However, despite this amazing growth, the stock price has only gone up by 15%. This makes a clear difference that has been pointed out over and over again since 2020. It was said again 3 weeks ago that the difference between Tesla's business growth and its stock price success would soon close, with a focus on Tesla's specific innovations. The fully self-driving feature and the Optimus robots are 2 areas with a lot of promise. These technological advances are being sold at a price that seems like a steal when you compare it to how much Tesla is worth now. It's important to remember that Tesla's $700 billion market cap may seem like a lot, but it's actually pretty small when you think about how FSD and Optimus could change everything. FSD wants to monopolize licensing deals across the auto industry with a nice 80% profit margin, while Optimus could change industries on a scale that might be bigger than AI itself. It's not about being smart or having a prophetic vision to see such good opportunities. It's about using a methodical approach to find companies with strong growth potential. At the start of 2023, a strategic focus was put on choosing companies that would do well in the coming years. During the year, 9 carefully chosen stocks were covered, including industry giants like Google and Tesla. Bungie, SoFi, Ariosta connects a supermicrocomputer, and an NVIDIA card. Each of these companies was chosen because of their strong foundations, innovative capabilities, and market positioning. The numbers speak for themselves. These stocks have seen an average increase of 116% in the last 18 months. Supermicrocomputer has stood out with growth that has been so fast it has surpassed even the most optimistic predictions. Also, the suggested investment in the SP 500 has returned a respectable 44%. Which is a lot more than the average market rate. This shows how important it is to have a well-researched and diversified investment strategy. It also shows that big returns are possible with the right approach, even in a volatile market. This history of finding high-performing stocks emphasizes the need for careful analysis and strategic investment decisions. To do very well in the stock market, you should focus on companies that have strong growth indicators and the ability to be innovative. There's the last bell on Wall Street, and now it's market dominance over time. We're joined by Jared Schnitzer to give you the latest on what happened today. Let's start with where the major averages ended the day. They were pretty much the same as they were about an hour ago when we checked them. The Dow was down 53 points, which is about 0.1%. The SP 500 didn't change much to the upside, but any gain today would mean another record close for the SP 500, making it its 36th record close, the 36th record close of the year. This accurate prediction isn't due to being the world's best trader or investor, having a crystal ball, or going with your gut. Instead, it's using a simple system that works. This system checks for possible investing based on a number of important things. Tesla and Paylor both show a key sign of financial health by making more money. Not only does this upward trend show that the companies are growing and gaining more market share, but both of them are also building up their cash reserves, which shows that they have good financial management and can fund future growth without having to rely too much on outside funding. Leadership is another important factor in the success of these companies. Tesla-led, which is run by Elon Musk, who is kind of like a founder, and Paylor, which is run by founder Alex Karp, both have visionary leaders who are deeply invested in the future of their companies. In these types of companies, management and shareholders' interests are often very aligned. Recurring sources of income are important for keeping a business stable and predictable. Tesla's full self-driving capability and lighter software solutions bring in a lot of steady cash flow, which can greatly lower fluctuations in the company's finances across fiscal periods. Price control is one of Paylor's main strengths, as shown by the fact that its top clients pay a combined $50 million a year. This shows not only how valuable and necessary Paylor's products are, but also how competitive the company is in the market. The system also values founder-led leadership, recognizing the unique vision and commitment that founders bring to their companies. It looks at recurring revenue streams that provide a stable and predictable income, reducing financial volatility. Pricing power is another important factor because it shows how well the company can keep its profit margins even in tough markets. By using these criteria consistently, you can find companies that are not only doing well, but also have a lot of room to grow in the future. This methodical approach makes stock selection easy to understand and doable for any investor willing to put in the work. This approach offers a practical and tried and true way to navigate the complicated stock market, whether viewers are tuning in for a quick update or a deeper dive into how the market. Both Paylor and Tesla work in large markets. Paylor is well positioned in the huge AI industry, while Tesla works in engineering, software, robotics, energy, and the auto industry. The huge number of growth possibilities in these areas makes them strong foundations for the company's future. Another important strength for these businesses is that their customers stick with them. Paylor has a net dollar retention rate of over 110%, which means that current customers not only keep buying from them, but also spend more. The same, there are a lot of people who keep buying Tesla cars. People who buy a Tesla rarely switch to other brands like Ford. This shows how strong Tesla's brand loyalty is. During tough times like economic downturns or crises, it's important for a company's business model to be resilient. For example, Tesla's sales went through the roof during the pandemic, showing that it can do well in tough situations, with big government contracts and high-end clients who don't care as much about changes. In interest rates, Paylor shows that it can be strong during tough economic times. These reasons include pricing power, market potential, keeping clients, and being able to handle downturns are the most important parts of a good investment plan. That's why most experts put 40% of their money into Paylor and 20% into Tesla. These basic principles are available for free and can be used by anyone who wants to improve. Would love to hear your thoughts on how you think Tesla's pricing approach stacks up against other car companies. What do you think Paylor's stock value will be affected by as the AI market grows? Leave your thoughts and questions in the section below. If you found this analysis useful, please click the like button and sign up for Tesla Stock News to get more useful material. Thanks for watching, and we'll see you next time with more Tesla news.